Hi everybody. I'm very glad to meet you for our very first live stream. I am for Monahay and I am Mark, and for the very first time we meet Aiden from Betweenplays. So before we go any further, we are not financial advisor. We're just talking and discussing about the market. So don't listen to us if you're not invest. Just kidding. So Aiden, what do you think about the stock market right now? How does it look like for you?
Oh my God. Honestly, it's what a disaster for a while. I mean, like, okay, look, it's still going up and stuff like that. But you have these like just these chart patterns that are just, it's like it's up, it's down. One little piece of news that comes out about basically anything. It's so reactive. The market is super, super reactive at the moment. It's just incredible. So I mean, where do I think it's going to go? I think that with most of these, if you look at the professionals alone, they've been calling for a crash for a long time, and I know a lot of people are saying that well, it's some people are saying that it's already happened. The coronavirus is a part of that crash, but I don't think so, because the world debt clock, for finances, it's very, very, very high. But what's your take on that?
So right now, I would say the stock market is buoyed by all the speculation. It's just like everybody got their stimulus check. They wanna invest in the stock market as like really quick money because it's what they have always been said. So like, oh, invest in the stock market is gonna be a great return. Or even back then when like it was under Trump's government, it was like Trump would say invest in the stock market, and then person would invest. But how? Why? It, it was mostly based on speculation because somebody said so. And right now, I think so. It's a little bit contradictory because to me, um, let's say between December from February, when to me it should have been the worst for the stock market because it was when there were lockdowns, the COVID cases were to the maximum. To me, the stock market should have went down and it went up. And when we're talking about the economy reopening, so beginning of March, it's when the stock market start to go down. And now that we are talking again about inflation data, labor, and unemployment, the stock market keeps rising. Um, yeah, so basically, it's what you're showing us right now. Like, it's rising while we have a big inflation data. I think if I remember well, for the US dollar, it was 5%. Do you see unemployment that keeps increasing? We keep printing money, and the stock market goes up.
Yeah, 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 absolutely. Like, I'm just looking at this chart over here, and it's quite incredible. I mean, like, it's the S&P 500 is pretty much parabolic. I mean, if you look from 2008 and on, the growth was, it was positive. It took a little bit of a hit over here, and this was during the election time. Basically, there was uncertainty, and of course, Trump is a financial person. He's a stock market guy, so you can see that there was a massive rise here. Took a little bit of a hit in 2018, 19, but corrected itself almost immediately. And then you have the coronavirus, right? And you just look
Yeah.
at that fear. The VIX index was at all-time record highs, and but the correction was very fast. I
Hmm.
mean, within a year, within like not even a year, less than a year, a few months actually. I mean, if you like take a look at the date of when the stock market crashed, let's say March, I mean, by August it's already surpassed, and it just keeps on growing and growing under exactly what you're saying, like inflation talk. This morning they were saying that the wholesalers were paying more for the stock because of what the producers are selling that stuff for more, and it's due to inflation. But it keeps on growing, and you gotta wonder why. And yeah, stimulus checks is one big part of it, absolutely 100%. But what's keeping this going? Is it new technology? It's
Yeah.
it's anyone's wonder, but this is when you look at that spike. I mean, if you're a day trader and you see a spike like this, someone's going to be shorting this pretty soon.
Yeah, for sure. There are like some big names who are calling for a crash and then who are like, "Oh, I am shorting already right now in just a matter of time."
Yeah, yeah. Well, you can see like every time, if you just go with trending patterns, if you go with trending patterns and you look at the stock market and you look at this trending pattern, it doesn't, there's a lot of instability, and you can see that everywhere else. Now, the
Mhm.
thing is that when you look at, the 2000 crash, okay, of the .com. So if we go back here, all right, and you look at the 2000 crash, well, let's just go a little bit before that. Let's go to the 80s. If you go
Mhm.
to the 80s, you're going to see that, computers started coming out like more like Atari, like home gaming systems. And there was new technology coming out. You had VHSs, VCRs, whatever you want to call them. DVD players ends up coming out, and then of course
Mhm.
with 95, you can see it's uptrending over here, and that's good because it's new companies, it's new technology, and that makes people invest in these new things in order to see growth, and we see that kind of growth
Mhm.
here. Then we have the 90s, all right, and of course you have your
Yeah.
little downfalls because you had like recessions, you had the interest rate, which because of inflation, and you saw what happened, and there's downfalls, but because of new technology, we saw growth. Look at
Mhm.
the 90s, 95, and these years on. I mean, what happened in 95? I mean, just look at this and look at the Nasdaq jump, look at the S&P 500 grow. Everything in these years you will see grow. Why? Because of the internet and the .com bubble and all companies that could just put .com at the end of their. I mean, if you just took any random company and they said, well, now we're on the .com. I mean, the company would grow just because, oh my God, they're on the internet. It was just such a big, big thing.
So wait,
And
would you
yes,
just saying like the whole market was just like carried by just one type of sector, even if it's like the internet, but just by just one sector?
I just think it's new technology in general.
Technology?
New technology in general. I mean, I think that once people start putting money into the stock market, even if it's just one, because you take one big industry, like if you look at Tesla, for example,
Mhm.
just they've been around for a long time, but how many times did they almost go bankrupt? And Elon Musk had to put his own money in, and to save it. People were skeptical. I mean, money was still more in like the Toyotas and the Nissans and all these kind of cars until all of a sudden we start seeing like, oh, the world is getting hot. We need new technology. This is going to save the world. And then all of a sudden you get the coronavirus that comes in, and then all of a sudden the green agenda starts, and then boom, the money gets in. The people get excited. Yes, because of course naturally there's a dip. People have access to Yahoo Finance, CNBC, all these types of all brokerage firms. It's so easy today to invest your money, and a lot of people in 2008 wished that they had this type of access in 2008 when the market crashed,
Mhm.
so that they could invest like that. But you have to remember that Apple, although old in computers, but if you look at like iPhones and how quick you can do everything today, this really mostly started in 2009. Because previous 2009, most people still had flip phones, or they still had like the pocket agenda type phone where you could just like slide it. They're called sliders. Those were still all the popular ones. Nokia was popular. All those guys were popular, but it's just the ease of access. So you get an industry, you get a startup, you get people motivated, excited. They come inside. Look at Tesla shares just grew incredibly, and what happened with that? Then companies like Neo, XPen, Li Auto, they
Mhm.
all jump in. And then, oh my God, lithium is important. Let's go to lithium. Okay, nickel, copper is still important. Oh, let's go to graphite. Graphite's a new technology. How come? Well, then again, how old has the technology really been? And people start
Yeah.
researching, and then it just starts to trickle out into the different markets. And then when everybody's putting their money into one sector, well, the money starts to diversify. we don't see the same growths, like the big exponential growths in one stock. You start seeing it played out, like Ford now. Like, you know, they got I think his name is Fields, his last name, I'm not too sure, but Ford just got a guy that came from you know, previously with Tesla, came off of the new project with the Apple car, and now Ford has him.
Mm-hmm.
Well, you know, this is important for Ford, and where is their stock going to be in the future? So now people will take their money, diversify. So one industry can make a lot of other industries work, but at the same time, well, once people start, because there's no such thing as unlimited money in our own portfolios, right? Because we're not all
Yeah, sure.
multi-billionaires, right? So we have to take out of sectors and to put in other places that we expect growth to happen. And what happens with that is that you can see those other sectors, if everybody's thinking the same way, like-mindedness, or because of, like, you know, Facebook groups and Twitters and all this kind of stuff where people share information that are truthful, right?
Mm-hmm.
And what happens is that people start taking out, and then you start seeing stocks go down. And one, like Jivo was at an all-time high. It was incredible. And then they went down to five something, and now they just made a deal with Chevron, and now it's starting to go up again. It went up $2 just yesterday, and that's huge news. But they take out from one place to go everywhere. Stop losses get triggered, and then the money just moves around. But you know, it's the big players
Yeah,
that matter.
also I was thinking, don't you think it's also about maybe the cryptocurrency market? Because you know, like at the beginning of the year, except Bitcoin and Ethereum, like and maybe Cardano, that's it. But after like people started to invest in the cryptocurrencies too because they saw that they could like make gains,
Yeah,
bigger ones than the stock market and real fast. So I was thinking maybe it's also like another answer why okay the stock market went down first.
yeah.
But do you think would be a possibility in the future that people maybe get bored of the cryptocurrency, or you know, like maybe like governments start to put their nose in it, they start to regulate it because right now like you don't, it's not that much regulated, right?
Well, no, of course it's supposed to, you know, cryptocurrency is supposed to be like the internet, right? It's supposed to be like a deregulated area, right? That's what it's
Mhm.
supposed to be. I mean, naturally with time, I mean, you can see that, you know, even on the internet, like you say certain things and, you know, cancel culture and stuff like that. So, you know, where it's going to go in the future, we'll see. I mean, look at what happened in China with cryptocurrency. So, I mean, but it's the opposite when you look at South America, you know? So
Mhm.
it's like, where is it going to be in the future? You know, some people say it's going to stay. Some people say it's not going to stay. I mean, I've invested myself into cryptocurrency to diversify my portfolio because I believe in a diversified portfolio. The way I handle stocks is, you know, the same as some people and very different from others. Like, I love listening to and reading everything on Timothy Sykes, and
Mhm.
I love Ray Dalio's way of investing, and Warren Buffett. You know, and I've read all the books that these guys have, Principles by Ray Dalio, uh, Graham for the Smart Investor. You know, and then Timothy Sykes. I read his books too. So it's like I believe in a diversified portfolio. I have some long term stocks, and naturally, I'll swing trade a whole bunch of stuff depending. You know, if I see a spike, um, like what the S&P 500 looks like, I'm, you know, I'm gonna get out. You know, I'm not gonna stay in a big. I'm not gonna stay in a. If this was an individual company, and I would have invested anywhere along these lines, anywhere, even if I would have invested here and it's up here, like my money'd be out because to me this is just a spike.
Mhm.
Like if you did not see S&P 500 up here and you saw an individual company, you know, do this, I mean,
Yeah,
it has to stop one time. Like,
what's crazy, I think it's like, let's say, okay, you look at the 1 year chart, you're like, okay, oh, it goes up. But when you look at the 5 year chart, you see it's what you're seeing like the huge spike. And yeah, you know, like, everything that goes up should go down like someday, somehow. But yeah, honestly, it's pretty crazy. Because after I was thinking, okay, right now you
yeah,
have
because this is that is yeah,
right now you to me you just have this cybersecurity market who who could be the future right now and the stock market could be carried by. No, actually, if you look at all the other sectors, it's pretty hard to say that all this sector is gonna carry the whole stock market regarding the inflation data and all the economics.
Yeah, I agree with you. And what scares me is that, like, if I look at like, if I just go with just trying to look at a chart, okay,
Mm-hmm.
without even, like, even if I were to close my mind of everything else, naturally I would be ignorant, so I would not do that. But let's just say we're just looking at
Mm-hmm.
chart, patterns. I mean, when you look at 1929 on, yes, okay, that definitely we're not using fiat currency, we're in the gold standard or anything like that. But I mean, look at just in 1929, look at this spike here. Okay, this is a huge spike, and then look at the crash. That crash from 1929 lived on for many, like 24 years, many years before it actually beat its previous high. If you go to the year 2000, when the dot com bubble burst, all right, a lot of people could say, well, it corrected itself by 2008. So if you just take here, these 2 years here, you can see a huge climb, right?
Mm-hmm.
Some drops in securities. Now at 2000, the drop was, it was sort of like gradual. Right? Some people could have got out; they would have lost not so much money, but they always thought it would probably rebound, and then they ended up at an all-time low. But it took a while for it to truly correct itself, because I find from 2003 to 2008, let's just say, a lot of derivatives played a part in the growth here. So lots of speculation and stuff like that. Um, I can't even say, like, this is because of massive new technology, like, because the technology I was using here, um, was the same technology I was using in the 90s. I mean,
Mm-hmm.
it was the same things, whether I had a PC or an Apple Mac, an iMac. There was no iPhones, there was no Androids. It was still Google, it was still Yahoo on there. There was no Facebook. No, all that stuff only came out around 2009, which you'll start seeing that massive growth from, because over here it was iPods. It was like small things that, well, iPods replaced the Walkman. Oh, big deal.
Yeah, yeah, it was the revolution. Yeah.
Yeah, you know what I mean? It was like, okay, we're doing a transition from let's say beta to digital or whatever. But this is where new technological growth really happens, I find, is when Apple comes out with the iPhone, and then everybody's like, oh my God. And then the internet's able to adapt. Now we got Facebook, we got Twitter, we got TikTok, Tencent becomes huge, in Asia. Google, through Alphabet becomes a giant monster. So when I say monster, I'm just talking about growth, not that they're a
Mm-hmm.
pattern in any way. But this I find is their true growth. This I find it's mostly because of derivatives. The stock market went up and the crash was horrible. If we didn't have, like, the whole derivative game, people like owning, like, like one person owning 3 4 houses, you having mortgages, like 3 4 different banks having mortgages on one house. It was not reality. It was not true stuff. It was like just stuff built upon other
All
stuff.
this stuff. Yeah, it was like a scheme. Yeah, sure.
Yeah, and what was it in The Big Short? I think that was the movie that
Mhm.
that shows that, right?
Yeah, you
And
said pretty well. Yeah.
yeah, and they portray exactly what it is, and their mind is blown by what they find out, and they find out that, oh my God, this is completely unsustainable. This makes absolutely zero sense. And once it hits, it comes to the retail investor. Once the game is busted, so to speak, well, it fell down. So in reality, until new technology occurs, the growth in the market isn't supposed to be that massive. I find that this is a big gain here, uh, but I find this is a little scary. This here, this is huge. I mean, I would
Mhm.
believe if it was a little bit more over a longer term, but this spike alone, it just it worries me with all the other stuff that you're talking about, inflation, all this other data.
Mhm.
Yeah, it's worrisome. It is a concern. And you look at people like Ray Dalio and all these people like Warren Buffett, Jim Roth.
Mhm.
Everybody's talking about the debt. The debt is the debt's huge, right? The debt is huge.
Yeah, but after I was wondering something about the debt because let's say in Europe we have the European Bank who is which is regulating the inflation, and
Okay.
let's say if a country wants to print money, the bank goes into the country and is like, no, no, you don't print new bills because it's gonna trigger an inflation. It's very
Yes.
regulated. But I was wondering, the US, nobody regulates them. Like if they want to print money, oh, we want to create like, a new stimulus, let's just like print more money. And then I was wondering, like as they don't have any regulation, but they still like all the international trades are still in USD. I was wondering, could the inflation really impact the US?
These are good. These are really good questions because now,
You see what I mean? Because like Europe, we can't have like an irregulated inflation that could lead to a crash. But the US, there is no like regulation, but they're still like very powerful. There's I can say they handle the world trade, but it's still in USD. And I was thinking about it because right now the chart is spiking, as you said. That could leads us to maybe a crash, as you said, but still, it's in USD,
yeah,
and there's a debt, but they keep printing,
yeah.
and maybe it's a short-term solution. Long-term is gonna be bad, but short-term, I would you say a crash short-term, middle-term?
Well,
It's I'm wondering because here it's like the US.
yeah. Well, if you look at just the debt clock, okay,
Hmm.
and you look at over here, let's just see. You have each taxpayer's share is nearly $1 million. I mean, imagine each taxpayer having to cover 850, $5,000.
Hmm.
That is, I mean, people don't even make that in their lifetime. It's
Yeah.
true. People, I mean, you have someone working on minimum wage. They're never going to make that in their lifetime. Even if you look at people that let's say in Canadian standards, because that's American money too there. So you got to add, if it was Canadian, if that were to be Canadian, the difference would be like over $1 million per individual. Even people that do 3 years of college with a great career, even in policing and stuff, the net that they take home, it won't make over $1 million
Hmm.
20 years of service or 20 to 25 years of service. So it's like that is a crazy amount of debt. That is a big amount of debt. So I don't know because they are the world leaders. Well, that's even debatable now, like because you have China, right?
Yeah.
So you got
Let's say for now, for this year, they're still maybe the world leaders.
Yeah, I mean, I know that China actually came out and said that they were their equals. I read an article that said that China said that they are now equal. It's very. I mean, I'd have to look at those. I'd have to look at those charts and the numbers and the whole 9 yards. In the world economy, they're saying that they are their equal. Well, because China was supposed to surpass the United States in 2032, but now the date's been brought to 2028. I mean, that's not a long time from now. It's like 7 years.
Maybe after because COVID, like as not like to stereotype, but a lot of things are made in China. So a lot of countries were dependent from China. So
Absolutely.
like from Europe, if you check everything is made in China, the US who are like gathering companies back in in their homeland. But still, I feel like COVID really it was a question of time, as you say. It was like 2032. Um, they're still very powerful. They're getting more and more powerful. So yeah, um, they're gonna be number one soon for sure.
Yeah, well, that's just it. Now the thing is that what we have to look at is, is it, will a great empire, like a great empire, let's say, call them a great empire. I'm just saying, when you look at history of like whoever is the world economic leader, whether it was the UK, the last ones, or when you go through history and time, I mean, does anybody just relinquish power like that? Say, okay, here you're the new guy. You're, like, yeah, sure, like here you're the new world economy. Like, you know, I mean, what goes with that? Does it, the stock market go with that? Everybody's now invested in Shanghai. Like what? So it's very dangerous. I mean, like if you look at throughout recent history, like not in our lifetime, but say grandfathers and stuff, depending on our
Mhm.
age, great grandfathers, which is not far away. Great grandfathers are not away, right? It's depending on when people are born. If you're having kids when you're like 20, you'll know your great grandfather. So great grandfather's time. I mean, the United Kingdom was the main stock market of the world. If you go back to like just let's say pre World War II, I mean, England was a massive, massive colony. Only after World War II did the rise of the United States really take over the world.
Mhm.
So so one had to give up stuff in order for the other one to be the power. So I mean, what's going to happen in 2028? What's going to
Yeah.
happen to the stock market? Could this, can that be allowed to happen? It's a lot of questions there, that's for sure. We're definitely living in a time of uncertainty when it comes to that, because um, definitely China is not going to just say, "Oh no, we're going to back down. We'll allow
Yeah.
you," and then the United States can say, "Well, no, no, we're the world leaders in economy and in military might and stuff like that, so we can't." So I don't know where it's going to go. I know that they live with each other like this. There's a lot of give and take between the two. So I
Mhm.
don't know where that's going to go in the future. It's very, very. We're living in a time that it's there's insecurity in the stock
Yeah,
markets.
yeah. I feel like it's a transition time, in my opinion. Like a transition of power, probably. But I was
Yeah,
thinking, as you say, like China will be number one, like in the future, short term or middle term. But I was thinking it would be then a good idea to invest in companies who are doing business in China, right?
yeah,
Let's say Canadian companies who are already investing in China. And when I talk about this, there is a company that you probably know, which is Peak Fintech.
yes,
Yeah,
yes, yeah,
Peak Fintech, and it's literally, of course, it's working with what you say when you say, "Oh, China is like exploding right now," like talking about economy, such as Peak Fintech.
yeah,
Um, and even if they go worldwide, but right now in China, it's booming.
yeah,
Hell, if I can see.
yeah. And honestly, I know even Neo had some gains recently. I
Mhm.
was in Neo when it was at $3 and something cents, March of 2020, and then, it boomed up. I made a ton of money on that. That was great. The only issue I have with I think, see, the thing is with Peak FinTech is that if I remember correctly, and I'm getting in my stocks, they are a Canadian-based company.
Yeah, they're based in Montreal. Yeah.
That's just it. So that's why I find that a company like Peak FinTech, I would have no issues holding shares in it, because it's under Canadian accounting standards. But then when Trump put on that Asian stocks had to be put on to had to go with the American accounting standards, and the whole issues that they have with each other. Like you can even see now if you do research on what's happening between China and the United States
Hmm.
in like stock market related companies and stuff. There's so much ups and downs. There's so much like things going on. There's like lawsuits. There's I got out of anything that was a company that was based from China, like a Chinese stock, because I'm not too sure where it's going to go. I don't, I'm not interested in losing any money. Peak FinTech is different, of course, because they're a Canadian company, so
Hmm.
doing great business. So yeah, definitely that's a company that looks interesting, and just look at the growth on it.
Yeah, I think year over year, if I'm not wrong, it's up more than 1,000%.
Yeah,
Like,
I should have taken advantage of that. I missed a lot of trades since February, because I know everybody on Betweenplays knows that I haven't made I made 2 3 videos I think in March or in April. I found that they were very bad videos. My nephew had just passed away. They're not like the types of videos I would have normally made, and see some stock splits there. But what was the stock split on this one in July?
yeah, it was in July. Yeah.
Yeah, July. Okay, yeah, yeah. And
I
anyways,
don't remember
so I
the
missed
exact
a lot
date,
of opportunities.
but and still right now they're gonna go to Nasdaq too. So honestly, it's a stock with great potential because right now they're just when I
Yeah.
say they're based in China, but they plan to go worldwide too.
Yeah.
So yeah, it's crazy. Imagine you bought it at first and you saw it like, like let's say you bought it here when it was like only like 50, 60, and you saw the first peak, oh, $4. Okay. As you said, like, oh, there is a peak, I'm gonna sell right now, and then waiting like
Yeah,
for
that's what happens.
a downtrend.
When
Yeah.
you look, yeah, when you look at, and depending on where the trends are going to go, even with peak fintech. I mean, like, because I don't know what that's a reverse split that happened over here on July, I would believe.
Hmm.
Yeah, so I don't know what how much of that growth was due to the reverse split, because I know that the reverse splits make charts look like they shoot up, but in reality, it's
Yeah.
so I don't know where the
It
real
was
growth.
a 2 for 1.
2 for 1. Okay, yeah,
Yeah.
yeah, 2 for 1. So it was at what, 250. So yeah, so that's still a really good. That's still a
Mhm.
really people made a lot of good money there still. Absolutely. I don't know what that would come down to if I were to look at that real quick. 2 for 1. I don't know. What do you think? 1150 maybe a possibility with time as
Yes,
as a
because
support.
right now everybody's talking about Nasdaq, and like
Uh,
everybody's frenzy. Oh, Nasdaq, Nasdaq. But
yeah.
I
So
don't know what you think, but like all the time it goes to Nasdaq. Let's say pre Nasdaq is going
yeah,
up, but
yeah,
after Nasdaq, all the stock. I do remember my medicine.
yeah,
It got hammered, and even high tide. I really believe in high tide too. Like they went to Nasdaq, and everybody thought that the stock would go through its fair valuation, but it didn't and went down after.
yeah,
So this is why, like, even if big fintech is going to Nasdaq, to me, it's going to be a long-term play because institutions are going to go in it, but they are smart. They're not going to invest right now. So yeah, you're right. Maybe 1150, 12 should be like,
maybe a support.
yeah, maybe
Yeah,
a
support.
super. I'm gonna wait for a Jeep and then it goes each cities before investing in it
Yeah.
because right now it's like so uncertain. But yeah, it's definitely like a great stock.
No, definitely. And I was thinking about, I don't know if you want to throw up there, Empower Clinics.
Mm-hmm.
Empower looks like it might be a pretty good play because, I mean, they're inexpensive. We all know that, telehealth and health it's going to be the future. I mean, whether you look at the coronavirus or anything, I mean, people, that's correct. See, 47 cents, it dropped down a little bit today. But we saw that there was a spike around
Yes.
March there, a huge spike. But look at that. Look at that drop.
Yeah, yeah.
And that's what I'm saying. When you see it, when you see big spikes, it's just chart patterns, right? I mean, like that's the Timothy Sykes. You just and naturally he knows how to do everything else. When it comes to
Mhm.
accounting and stuff like that. But I mean, you learn chart patterns, and you could read candles and all that kind of stuff. It's scary. And the one from Empower, what's scary is that there was no reverse splits in that one. It was just parabolic. It was like
Yeah, yeah.
a lot
Like
of
everybody
top.
was buying like day
Oh
after
yeah,
day, day after day,
I
and,
would
and
have. I,
I do remember it went to 250.
oh,
And then I was like, okay, I gotta sell at this point. And I think I've been lucky. I saw it when it was like 220. And then the day after, boom, it went to 180. The
yeah,
day after,
crazy.
140.
Yeah,
And after.
because the thing is that what happens is that when people start taking out and other people put in stop losses, and those stop losses get triggered, well, then there's a fear that comes in, right?
Mhm.
And then people just start taking out because so the support, usually when those stop losses are triggered all the way down, what happens is that you have those, I call them the real investors of the company that don't put stop losses, that are like, I'm investing in this thing long term. I got in at a really good price, and we can see it's at 47 cents now. And if you look at that, it's been around 40. It's been around the 40s for a while. So this is
Mhm.
where the support is. All below there, what's the lowest that it's been near to 47? That the lowest it's been is right
Yeah,
about there. Yeah. So what is that?
38?
38. So your support, you could
47.
just say it's around 38, 40 cents. Those everybody below there doesn't have a stop loss. And those people are like the real long-term investors of the
Mhm.
company.
Yeah, but like if you take a look, like right before the peak, it was like around like, yeah, you see like the
There you go.
bottom.
Yeah,
Yeah, the low was like okay, the first one was at like 30s. After it went, I do remember it went like to the 40s, went
yeah,
back to 36, 37 cents.
yeah,
This one after it went parabolic,
yeah.
and now, as you said, like it it found its real bottom.
Now the thing is with that is that there's there's something to be taken care. There's something in there too. When you look at before the spike and you got your 30 cents, 35 cents, and then you look after, I mean, there's bag holders in there.
Mm-hmm.
There's people that, you know, that things happen in their lifetime that they didn't go and take a look and they didn't get out fast enough. And they were in such a loss that they held on hoping that it would, shoot back up. And then it ended up at a point where if they take out now, they're going to have a realized loss that might be quite substantial.
Mm-hmm.
So that support has true investors and it also has bag holders in there that just can't sell. They got to wait at least, a year or whatever for this thing to take off again. And I'm telling you, if ever we saw it in Cloud MD actually. We saw in Cloud MD when it went parabolic, we saw that there was bag holders in there, and every time Cloud MD tried to shoot back up, the stock would crash and then shoot back up and crash. Why? Because all the bag holders from the initial spike, they just wanted to get out. Every time it
Mm-hmm.
went back up, they just got out because
Yeah,
they didn't want to be stuck, in a stock that might go back down to like 80 cents or something like that. Cloud
yeah.
MD got a good support.
And right now, sorry, it's an intro company. Like I see it's so obvious that people are trying to exit. It's crypto story. They were like a parabolic time too,
Yeah,
right here.
yeah,
And after like some few times they try to go above 20, but
yeah,
like everybody have their sell order like for 20. So the stock has never been able to recover. You see, like it
yeah.
went like to almost 20 cents, and now it's back again like to the 15s.
What were they before the spike? What was their
Before
support
the
before the spike?
spike, they were to 5.
Yeah,
After, I think they got like some minors, if I'm not wrong,
yeah.
and then it went to 15,
Oh yeah.
and then again the spike.
Oh yeah. 50 cents. Yeah,
It
yeah.
went to an all-time high actually to 84 cents.
Oh, okay.
And after, like what happened, they did a private placement at 50.
Oh,
Yeah, yeah, right
you
after.
private placement at 50 cents. Oh
Yeah,
yeah, for sure.
I do remember because right before the private placement, one of the board members sold for 800,000 worth dollars. And right after they did the private placement, and after it kept going like lower.
Well, you know what? I'm gonna. I don't know if you've heard of this company here. You know what? You can go to it. Neolithium. Honestly, I think that if any, this is that. Naturally, this is my opinion. Okay, naturally, like you said, we're not financial advisors. But we do our research on stocks. We like to have quality stocks in our portfolio. According to the research that we do ourselves, right? But
Wait,
I mean, I find that Neolithium, not lithium. Yeah, there you go. NLC. Yeah, that one there. I find this company, Neolithium, it's going to be absolutely huge. Like out of all, if you knew how much money I had in Neolithium, you'd be
yeah,
like you're crazy, like you're absolutely insane. Yeah, it's double digit thousands. It's pretty high. Um, yeah, I tell my friends, and they're just like, no, man, you're crazy. But the thing is that I've been in it since 30 something cents, and I've spoken about this company on Betweenplays in last year and on the website too, Betweenplays website, when it was like 30 to 60 cents range. And everybody that I know that was in it, I mean, right now they're making a lot of money. It's grown. But the thing is that Neolithium is producing, well, not yet, but their final feasibility study is like now. It's basically now. Our winters are their summers because they're in Argentina,
mm-hmm.
and basically once the final, they have Worley as a contractor on site, which helped build Lithium America, which is like it went up to 20, 30, almost $30 stock, came back down, consolidated, and now it's sitting up in the teens, I believe, or maybe I haven't looked at it in a while. But Waldo Perez, the CEO of Neolithium, He's one who was on the board of Lithium America when Lithium America was created. So you have like a CEO with experience. You have Worley, which creates these type of mines. They've done it for Lithium America. And then you have, on top of it all, Cattle, Contemporary Amperex Technology, whatever, limited, whatever the name is, the whole 9 yards. But I mean, Cattle is the world's largest battery maker on the planet. The planet. And they make all kinds of batteries, whether it's for, green renewable energy, whether it's for EVs. I mean, Tesla went to them back in 2000. They still build for Tesla, on that side of the world. They do it for other car companies, because I don't remember who's in and out. But if you go look at the list of the vehicles that they do batteries for the EV market, it's literally insane. So the way I look at it's like this: if they're doing home hub storage, they're doing all kinds of other battery storage things for EVs, which is the future and everything like that. And Waldo Perez put up a video saying, listen, when you look at the market by 2025, 2030, when you look at the market, we have nowhere close to the amount of lithium needed. They would need like 80 or something more mines to be able to produce for that much battery storage. Because people, they're focusing just on the EV market. But lithium goes in, even now you buy yourself a battery and it's like lithium ion battery. It's in everything. It's in your phones. It's everywhere. So I look at Neo Lithium and I look at them partner with Cattle. Cattle has an equity of 8% in the company. Cattle has one guy on the board and has one guy on the ground making sure everything goes smoothly. Why? Why would you do that? Why would I do that? Because we desperately need for this to work. That's the only reason why. If I would put someone there to it's because I want to make sure that everything's going smoothly. So, when you look at other companies like, oh man, I forgot all the big names of the companies now because I'm so into Neo Lithium. But when you look at all the big names of those that are actually out there with lithium, you're looking at like companies that are all $50 and up.
Yeah.
So Albemarle, I think, is one of them. SQM is the other one. You're looking at companies that, if you look at what they're posting on there, it's quite insane. So Cattle can't afford for Neo Lithium to fail, in my opinion. They can't afford it. So Neo Lithium, who should have a mine in production by the end of 2023 or mid 2023, something like that, this $4 range, forget about it. In my opinion, you're looking.
Yeah, it should go like on the upper side, right?
Even if, see, that's just it, because that's where I want to come back with it. Even if the stock market crashes, there's always companies that rise, and it's always in the new technology sectors. Like if you look at Amazon, if you look at like those type of companies that start out in the 90s and then went through the crashes of the the .com bubble, yeah, they took a hit. They took a hit, but relative to their size, it wasn't that massive. Because if you would have invested in Nokia in 1998, you would be crying today because they were the big stars of the .com bubble, those type of companies. And they tried to come back, but then Apple just destroyed them with the iPhone. And they've never, ever recuperated. And those people forget about it. It's like, look, maybe 5G could make them, come back a little bit, but they have big competition. I don't see, but these type of companies like Neo Lithium, because of Cattle and stuff like that, it's as soon as that's going to come up out of the ground, well, Cattle's just going to be taking it. It's like, oh, here, okay, do you have more? Okay. So I just see that their earnings, their revenues for Neo Lithium will skyrocket as soon as, look, if you look at their, hold on a second. Can you go, do you have it on your screen still? Can you still share that?
Can I on yours?
Oh yeah, here, I'll do it on mine. Hold on a second. Let me just, I just want, here, let me show you what is I'm looking at here.
Yeah, because I just removed.
That's fine. Here, let me just go to Neo Lithium, what I want to show you here, which I find is I find it's a really big joke. Do you see this screen?
Okay.
Because it says stop sharing here, so it says that. Okay, hold on. Let me just get rid of that other screen.
Okay, sure.
Because I got that other screen, so let me get rid of that one, and let me bring back this screen, and let me just show you what I find quite amusing when it comes to this. Is that here we go, and so I'm not so affluent on this one. So let's just see if I can get chart conversations, financials. Let's see if it's in the financials area. So, okay, that's what I want to show you. Just want to show you the side over here. Okay, look at the earnings that they have for company that it's not. That's just from their ponds.
Okay.
This is just from their ponds. They don't. They're not even up and producing mine yet. And if you go look at other, if you go, that's just because cattle. Basically, I would believe that's where it's coming from. That cattle is basically just taking. That's not really the one I wanted, but Lithium America is. Let's just let's just see out of curiosity what they got going on the side here. But no, I'm not getting anything. Rock. So it's lithium. So I want Rockford. So I just want to compare. It's Piedmont. That's Standard Lithium. Global X. Here it's Rock. One second. Just let me get this company here. This is Rock Tech. Rock. No. I can't find. There's a company. Anyways, look. When you basically, what I'm just trying to say is that their earnings of Neolithium is in the positive, and they don't even have a big producing mine. They just have. This is going to be a giant. For me, that so I have I got a massive amount of money in that, and I basically mostly in the cruise lines because at one point, look, it's either it's either bust or go up. So that's the way I'm seeing it with cruise lines, and I doubt that they'll allow themselves to go bust for the virus and stuff like that. But I'm basically out of a lot of other companies. I still have some in CloudMD. I still have some small amounts in case there's breakouts. But my two biggest investments is Neolithium and cruise lines right now. And this one here, it's insane. Like I said, my friends think I'm crazy, but
No, for sure, lithium is the future. I mean, it's like, as you said, like we see lithium everywhere. Like it's in our cell phones, in cars in the future.
Yeah.
So the world needs lithium for sure.
Yeah. So this is it, and I mean, like right now, they took out cattle took out cobalt to make things lighter and longer living. I mean, cattle has a 1,000,000-mile battery. So when you look at that kind of stuff, for me, this is going to be a giant. I mean, Tesla is still with cattle, so it's Tesla is the number one EV that sells on the planet. So how can you go wrong? I mean, it's they also, if I remember correctly, they also make batteries for BYD. I'm not too sure. Anyways, you have to look at that. But yeah, just a complete monster. This is going to be a monster too because they're the ones that have to give. Listen, without lithium, cattle doesn't exist.
Yeah, period.
It's like neither does Tesla. I know cattle's coming out with the sodium battery, but I mean that you're looking at generations, in the making in the future because it's unstable. But that'll be probably the future battery, sodium battery. But you're looking at like.
Yeah, and I was thinking just for my personal topic, my last one.
Yeah.
I was thinking because we're talking about future, we are talking about EV car batteries.
Yeah.
I know that a lot of companies are turned already about hydrogen.
Yes. Russia is supposed to be exporting tons of hydrogen out of Russia in the next few years. Yeah, hydrogen is.
I think about like the American ones, like such as Plug Power. I think it's like the biggest one right now.
Yeah, Plug Power.
Contract with Renault, French car manufacturer.
Yeah.
Do you think so? Because right now we think about lithium batteries, but do you think it's going to be sustainable in the future, or it's just like a transition technology? Do you see what I mean? Like, it's going to be here to stay, lithium, or it just like transition because like the world want to stop with petrol, with oil,
Yeah.
and we have to find like right now a quick solution. And as we already have lithium in our hands, we know how to use it.
Yeah, exactly. That's exactly, if I continue off of what you're saying, I think that humanity, what we've learned to do is we've learned to deplete resources. If you want the truth, we learn to adapt. If something, we're going to deplete that resource, because if you look at the way the economy works, you know, you don't have like when I was a kid, you know, you used to have this big TV that would be on the floor, you know, with a big cathode ray
Mhm.
tube, you know, the big TVs, and they would never break. I mean, you could throw things at it and they wouldn't break. I mean, they would just last for like forever. That's not you know a sustainable economy. They realize with time that that's you need to be able to replace things. You have to live in a consumable consumerism type world in order for it to. So yes, oil right now, we you know it's being put with all these different you know for climate change and all this kind of stuff, saying this is bad, this is bad, it's bad. So we need solutions. So there's companies like Gevo that that reduces the emissions and stuff like that. Then you have you know companies like Plug Power that are coming with you know hydrogen and stuff like that. And of course you have the lithium, which is in the batteries. I
Mhm.
think that they're going to want to deplete. Um, I think there's going to be a massive market for some things like Gevo. I think is going to work more for let's just say airplanes, because we don't have the amount of power and endurance that we need from lithium to have a plane go from, let's say, Montreal to China, all right,
Mhm.
or something like that. You know, so you're going to want to use the technology that already exists that we're good at, but then maybe try to reduce its emissions or get it to a net zero emission. And then you have technology like that Gevo. That's why Chevron is with them today, you know, because they offer a technology that's going to be amazing for the aviation industry. And things like plug power, hydrogen. Well, you know, hydrogen. What people are afraid of with hydrogen is it's you know, you know the instability that could come with it, the explosive power of it, and all this kind of stuff. But as the technology is more refined, and so because I mean, you could use this for long distance trucks. Let's just say,
Mhm.
you know, you can use this for a lot of different things. You could use it for boats. I know there's liquid nitrogen gas right now, LNGs, that are being used for boats and for and lithium is also playing a part in that as well. Like Carnival Cruise Lines has all this new technology to make it green on these all these new boats of 5,000 passengers and more. But you know, they're all going to have their little place. I think lithium is here for the long run. I think it's going to be here until what you know Elon Musk said in Battery Day last year. You know, at one point batteries will become recyclable. You
Mhm.
know, and then you'll have companies that are going to have to jump in, that are going to have you know have to have recyclable type technology to recreate these batteries and whatnot in order to stop like mining processes. And that's like companies like ACDC, you know, that comes into
Yeah.
you know electric vehicle
Yeah.
battery technology. You know? So it they're all going to have their own little niches, and then you never know. Maybe at one point it will be hydrogen, or it'll be fusion. Fusion might be the big thing in the future. You know, it's but definitely they all have their place. It's just how much of it is probably going to be used, or there might be one or two big, massive companies in that domain. Plug Power looks like one of them. I was in them when they were like at $10 or something like that. I made a lot of money off them. I got out of them because at 24 something, I was just I don't remember why I got out, because I was looking, yeah. So I was looking at their net income. I was looking at this type of stuff on their balance sheet, and for me, I was just going. If I look at their cash flow statements as well, um, so I can get this one, of course. Let's see if I can get the balance sheet up over here. No, can't get that one up too. Oh well, they were working before, but huh. So yeah, so that's a little bit for me. That was a little bit worrisome. So I decided that that I didn't want to stay in that play, and that
Mhm.
was basically like that was basically because look at the retained earnings. The retained earnings alone is Like that's a massive amount. It's like almost $2 million
Yeah.
in retained earnings. Like that's so for me when I look at because when I play my stuff, I'll read all these financial statements too and everything like that. And then at one point I just go, oh, the company might be here for the next 30 years. It's possible, but I don't know if there's going to be a dip on that because maybe people will start reading that and go, oh well. So at one point I just get out and then I look for other things
Yeah.
like CloudMD, which has CloudMD's got amazing financials,
Hmm.
amazing financials, and they're really undervalued. And I think the retail investor who owns most of that stock, like Dr. Hamza's not doing videos anymore and stuff like. I don't see him very often, so it's more of a retail play. But companies like CloudMD, that company there with that kind of leadership and all the people that are at the helm, God knows that they could be huge in 10 years from now.
If I'm not wrong, what scared like the retail investor from Cloud and MD was when they were doing a lot of acquisitions and they were diluting a lot of shares.
Yeah,
Yeah, do you
I
remember?
remember that.
I remember like because I invested in it too,
Yeah,
and at the first and second acquisition, I was like, wow, it's nice. But after when I saw like on the web they were doing it like dilution, dilution, dilution.
yeah,
Like
yeah.
I remember like, it's only scare people.
Oh yeah, absolutely. Because you could only dilute and dilute and dilute until all your motivated shareholders are like, well, I just bought it at 250, let's just say, and now this guy is getting it for $2 or 180. Like it's not
Mhm.
or what all this kind of stuff. And this year, I think what really hurt CloudMD this year is that other people were saying like other people like that work into the company. I don't want to say any names, but they were stating that the TSX uplisting was supposed to happen in June, July, or whatever over the summertime. Here we'll even give them August. Who cares? Because we're in
Mhm.
September now, and it still hasn't happened. You
Yeah.
know, and of course they're saying, well, we want to be in a better position, or we want to do this, or we're working on our acquisitions in order to grow it into our thing, in order to eventually go on to TSX.
Mhm.
Yeah, then why say it and have all of your retail investors so hyped about it for the summertime and then it doesn't happen? I mean, of course it's gonna throw us off because now we're gonna be like, well, wait a minute, you said something, you didn't do it, and that's the most important. Is that when someone says something, they should do it. You know, it's in anything in life. Even if I
Yeah.
tell my kids we're going to La Ronde, and I don't tell them, they're gonna be disappointed. They're gonna be sad. They're not gonna
Mhm.
trust
Yeah,
me the next time I
definitely.
say I'll go La Ronde.
No, it was really this. Yeah, for sure. Honestly, like I was really disappointed. As you said, like they have great financials, but I think it's very important for a company. And this is why like I'm gonna talk about Globex data. I really like because the CEO talks a lot on the website CEO.ca, and when he says something, he does it.
Yeah, that's
Like he's
important.
like, I'm gonna raise cash. He's raising cash. And he's like, we're gonna use it this way, or for advertising.
Yeah,
We're gonna go to news to the street. And the week after, you see like a statement from the company, or they're gonna be featured in news to the street. And every time they say something, they do it. And
yeah,
right now, even if it's like the experimental stage, the development phase,
yeah,
but the fact that there is a trust between the shareholders and the board,
yeah,
keep the price right now it's on like 49 cents, 50 cents. And it's why I really like that company because okay, they are in the development phase, but there is a trust, and every time they promise something or they say they vow something, they do it.
yeah.
And
That is very important because that's what I could say for Neolithium. Neolithium, that is exactly what happens. If you look from 2016 till now, they've always been on time and on target. And that trust, I mean, that's a lot of years now to be able to have that kind of, we're doing this, we're doing this, we're doing this, we're doing this, this is happening, and every single step of the way it's happening. Well, that's amazing because CloudMD, it was like this whole small period of time. It was a very small period of time where all these things were said that were going to happen. A small window. It's not like 4 years of or whatever amount of time that
mhm.
oh my God, look at the trust that we're building. Look at this, it's incredible. And then we're going to uplist, and then it didn't happen. Sure, it'll happen in the future, but it didn't happen when it was said that it was going to happen. And that's where people start getting out, start getting discouraged, have a fear. Will it? Will it not? I mean,
Mhm.
financials are amazing, and we have to always look at too, because you were in it, right? So how about what happened to Quebec and what happened to Alberta? I
Yeah,
know
right.
the
I
years.
haven't downloaded the app. I downloaded the app. I was waiting for the very first thing would be like available. You go on the app. You can check.
Yeah, exactly. I know. Like, how can you not have that happen?
And like, okay, it's Quebec, but Quebec is only 8 million inhabitants. It's only 8 million, and I was like, how can you promise something and then like never feature in your app? And yeah, it's crazy. It's crazy.
Yeah, because I downloaded the app. I've tried the app, meaning like I've asked people that live in Ontario, they could actually do the app. But I mean, I was limited in what I could do, but I could see that, oh, I can set up my children here. I can do this. I mean, the app is incredible. They have such an amazing product that they could bring with, especially with the letters of intent that they have with China. I mean, they could have so. It's just that. Well, what happened with Quebec? Why are you not here?
Mhm.
Why? What
Yeah.
happened? And then what happened to Alberta? I mean, honestly, listen, I can understand Quebec. I can understand because there's a lot of there's barriers to entry. There's the language. Because they're from Vancouver, so they might not speak French. They have to hire someone to speak French. There's also the distance.
Mhm.
Because if you look at companies like Boston Pizza, I've read his book too. There's the ups and downs. Like the country is really large, like wide. So I mean, if you're in Europe and you go from Italy to like France or to Portugal, I mean that is a very small distance in Canada, okay, for countries, right? And
Yeah, for sure.
the cultures are completely different. We talk about Canada like Vancouver and Quebec. Oh, it's Canada, but they were so far away from each other. If this was Europe, that would be a different. That would be a different culture. That would be like Moscow. If,
I'm gonna be honest. At this point, like this distance, it would be like literally another continent. So
That's
we are.
what I'm saying. That's what I'm saying. So the thing is that for them to come here, they would have to have boots on the ground. I mean, they did it in Ontario.
Mhm.
Ontario is a little closer to them. It's also very anglophone. It's English and whatever. But over here, you have the French culture, the French language. You have because every province gets to do their healthcare the way they want to. So you have to look at that healthcare the way they do it. And Quebec is very in charge. Of I'm not saying the other provinces are not, but we work under the civil, which is an old Napoleon. Different here. It's not the common law that has jurisdiction here. We have a different ways of practicing under that. So it's like I expected for Quebec to be difficult to get into.
Mhm.
So then I look at Alberta. I'm like, come on, Alberta. Why are you not open in Alberta? At least go get that prom. You know what? For 2021, make Cloud and V shareholders happy. At least go to Alberta. At least.
Mhm.
If you're not doing the uplisting of the TSX this year, and if you're not able to get Quebec because we'll give you that with all those barriers to entry that might be a little bit more difficult because if you look at all other telehealth companies, they also have a very hard time opening up in Quebec. Well Health, you can look at Maple, you can look at anyone.
Mhm.
In Quebec, they have to charge a fee. They're not using. Anyway, you have to do the research on it. But the thing is that Quebec is more difficult.
Yeah.
So get Alberta at least. I mean, you said you had TSX, Quebec, Alberta, all 21. Get out at least. Come on. I'll invest. I'll invest a massive chunk again. Like, if I see that they get Alberta and that Quebec is around the corner, I'll go back. Big time again because that was one of the most traded companies at one point
Yeah.
with
Yeah.
with and Apple. That's insane. And it
Yeah.
was events.
This is volume. Yeah. Yeah. For sure.
Yeah.
Yeah. It
Anyways.
was something like the stock was halted sometimes because like there were too many trades. Yeah. Yeah.
Yeah.
It was insane. Yeah. For sure.
Yeah. It was crazy. It was like, and those halts just like stop momentum, right? Right.
Mhm.
It sucked because it stopped momentum, but it was just insane for that company. So I still believe it's got a great in the stock market stuff. I think that the fact that the things that were said, 2021 is about to end. We'll see. He's because Dr. Hamza said 2021. He didn't give a date nor time. He just said that he should get Quebec and Alberta in 2021. It should happen. But I mean, if you get Alberta, that's okay. They have a great balance sheet. In the future, you know whatever. I mean, telehealth is the future. So, but
Yeah,
we
for
went back.
sure.
I think we're back to a marathon now.
Hmm.
It's a longer term thing again.
Cool. Because we were talking about, like telehealth, and I wanted to talk, like, for my last company, I wanted to talk about that company, which is Powerbrand.
Hmm.
Powerbrand. Like, you
Yeah.
might know this one, right? So basically, if I'm not wrong, they connect car dealers like online. It's like e-commerce.
What's the name of the company again? Tell me again.
Powerbrand.
Power Band.
Yeah.
Yeah, Power Band Solutions.
Yeah,
Okay.
Powerbrand Solutions. And right now, the e-commerce for the car industry only represent 1%. In comparison, apparel is 30%. And for the last earnings, if I'm not wrong, they had a 30% growth.
Okay.
And it's one of these promising companies, like one of these promising technologies.
Okay.
And this one is very interesting. And also, like, the board is very communicative. They have like 40% held by all insiders. They have like great fundamentals. And
Okay.
yeah, like, I want, like, just to jump on this one, because when you were talking about future technologies, like the e-commerce, or like platforms, to me it's like the future too.
Okay. Yeah. This one here. Yeah. 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 I'm looking at
Yeah,
that
like,
right.
if you just check, like, for the one you chart, like at the beginning of the year it was only like 20 cents, something like that.
Okay.
And the price started to go up like recently.
Okay. Okay. Yeah. So it's starting to pick up some speed now.
Yeah, it started to pick up some speed now, and it's like only at the very beginning, because like, um every month, like, they new like car dealerships, they send new partnerships. So it's one of these promising technologies, and one of these promising companies for the future.
Yeah, we could see it because it was like around 19-20 cents, and
Mhm.
yeah, that would have been a nice. And look at that drop here. What it went back down to 72. So yeah, here we go. And then well, yeah, it probably has a. It's probably going to pick up momentum. Yeah.
Yeah, and it's serious. You know what I said? Like, I really like companies that are very communicative, and when they say something, they do it. And the board, every time they say something, they do it. Like, when they have targets, they are always on track to accomplish them. So it's a nice company, to be honest.
Oh yeah, absolutely. I mean, that looks interesting. That looks very, very interesting. Yeah. So yeah, I don't know, man. If we go back to where we started with the market in general, um, I think that eventually we'll have a crash. There's some good here that might be able to weather the storm. I don't know when that crash will come. I did some more research on it. I had like a thought, if I was following trends, it could have been around 21 in the TSX or something like that. But the more you look into all the new technologies that are coming out, and you look at um, you look
Hmm.
at stuff like cybersecurity, and there's still a lot that could still allow for growth for a while for this to play out. But I don't know at what point that it'll fall. But I basically my strategy is to have a very small amount in certain companies, and then if they drop, to be able to have cash to buy in on a drop if there's another. Not if it's going to happen, but just know when
Hmm.
or drop, but to have cash on hand to buy in on their dips. Neolithium, I'm not going to bother touching. For me, I have it there. It's make or break for that one there, and it's just because I believe it'll make it. Uh, will come down for a bit. It'll just shoot back up, um, and they got big companies that are involved, like Cattle and BlackRock. Number one investor is
Hmm.
BlackRock, so huge. But I'm definitely mostly going to be going to cash very soon. Even in cruise lines, I'm planning on waiting to a certain out. I have a certain out, and I'm just going to be going to see what happens, because if the market does crash soon, I don't want my money in cruise lines and stuff, because I've
Hmm.
seen by research, cruise lines in crashes, they'll like fall drastically, like really really bad, and then but they'll shoot right back up. So naturally, I don't want to be stuck with most of my money in cruise lines, and then I can't buy those that massive dip that's going to happen in the future. So I mean, I've been in cruise lines when they were like $8 or something like that.
Yeah.
So the profits are insane. So of course I want to take those profits and then do that.
Mhm.
But look, there's a lot of insecurity for where the stock market might be going. Inflation, world debt. I mean, almost $900,000 per taxpayer in the United States. That's literally insane. You know, and if you compare their debt to their other countries, it's huge. So I don't know. Anyway, I don't know. New technology sectors usually do good in these times. Because if you have your money there, and if they have good cash and they have good
Mhm.
financials, they usually weather the storm better
Yeah.
than the
So,
big boys
so,
at the top.
so if we have to sum up our live stream, you would say like a cash would be a crash story would be more likely to happen anytime soon, and only the not only but like the companies with great financial and promising technologies should like shouldn't be that much impact, right?
Yeah, I think that they'll have minimal impact, like Amazon had minimal
Mhm.
impact back in the day, and then they saw growth with time. And ones that have strong financials, I mean, naturally, if they have strong financials and they're part of the future, then they should do well. But I totally, I don't believe in having all your money in the stock market to begin with.
Mhm.
Uh, and if you're gonna play a big amount of money, I would more go with a strategy like Timothy Sykes, because I'm not fully like a Warren Buffett type investor. Um, I have I'm impatient, so to speak. So I could have long-term plays, but as long as I have a lot of cash to do swing trades and shorter term plays, and I can always go back to my cash. So like neolithium is like my my baby for the future, that I have a ton of money in, that I'm thinking I'll probably, anyways, for me it's gonna be huge, but all the rest I'm waiting. I have an out even for cruise lines, and I will be out, and then most of my money will all be in cash, and then I will get into stocks and I'll swing trade them. But I have a little bit of money in certain other little companies, uh, an amounts that I could afford to lose, and I find is very important. People should
Mhm.
be very careful of the stock market, because 98, I think the statistics are 98% of the people don't make it in the long run.
Yeah.
Investors. So you got to be very careful, and read and research. Do your own due diligence. I see a lot of people on the internet just going, "Well, should I do this? Should I do that?" That's bad, man. As soon as you start asking what I should do to other people, and you
Yeah.
don't even know these other people. I see people on Facebook groups asking what people should do, and I'm like, but you don't even know that person, and you're listening to them, like,
Yeah, yeah, like the Yahoo board, like the Yahoo
oh
board.
yeah,
You go there, you go on a company, and they're like, "Oh, should I buy that company?" Obviously, the persons are gonna be like, "Yeah, buy it," because they are investing in.
oh
But
yeah, no, no,
do your own due diligence,
oh
and
yeah, you definitely have to do your own due diligence. You cannot. Yeah, sorry, just I'm looking for you can't, like, look, I mean, like, buy books like this, The Intelligent Investor. Like, and look, it's a product placement. I'm not getting paid for this or anything, but just for people that are following us, it's because I'm not interested in people going broke. If my YouTube channel, not like I said, I do it for my kids so that they can learn how to invest one day. So if I have to tell people out there, like, as if I was talking to my children or something like that, because that's what my YouTube channel is about. It's for my children to eventually one day, if I'm no longer around, if something bad happens to me, I want my kids to be able to like see daddy on there and explain about
Mhm.
investing. That's what my channel is about. So I would, say, buy books like, this is Warren Buffett's mentor right here, Benjamin Graham, The Intelligent Investor. This is one way, you get that, you get other books like Ray Dalio, Principles, and that's a different way, diversification and stuff. And then you get, Timothy Sykes, this is American Hedge Fund. He's got the books here, and you'll learn, you'll pick up your own strategy, your own way of investing. And when you start seeing things like spikes on a chart like the S&P 500, To me,
Yeah,
if it
you'd
would
be
be a
worried.
spot,
You'd be
I would
like,
have been out already.
yeah, yeah, some, yeah, yeah,
So,
for sure.
but there could still be growth. Who knows? It's a stock market. It's a stock
And
market.
the only thing I think we can say is like only future will tell us what happened. It's like the only thing that we can be sure of.
Exactly. 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 But definitely, most of my money is going to be going to cash very, very, very soon. Like I'm definitely watching the market very closely. It could either be a crash that's really quick, like the Great Depression, or it could be a crash that's like the year 2000, where it was
Mhm.
gradual over a few years. But I'm not in the big tech companies because I just like look. I don't know if you saw this morning that ARK Investments supposedly took out money from. They sold their Tesla stock, not all, but like a massive chunk. Did you
Okay,
see
no,
that?
I didn't see that because this morning was pretty busy. I didn't check the news at all.
Yeah.
But
So if you see that, that is like some really huge news. Like why like ARK Investments and Tesla, like just that alone is yeah. That's a big thing. Like why did that happen? Is it just because they needed cash? I mean, what the minute, and of course my computer freezing. It won't let me go to. But yeah, my computer is completely frozen. So
okay.
I'm trying to get it up there. 1 second. I just want to here. Just 1 second. So see, Tesla investing. Mm, yeah. So I saw it on somebody put. So anyway, somebody put it on Twitter. Maybe I should actually do my own due diligence to see if it's true. But somebody put it on Twitter. But people that's watching this should actually go and look to see if it's true. But if ARK Investments is selling, if that happened, which I should go check, because I just saw it just before I got on with you, right? So if that actually happened, I mean, that's scary. Because why? Is it because of things like we're talking about? That kind of spike,
Mhm.
inflation. Why? Why was it sold? So, anyways, only
We'll
time will
have the
tell.
answer for our live next stream, our next live stream. Sorry, right?
Yeah, you know
I
what?
hope
That's what we'll
so.
do. We'll look into what's happening for this, and
Yeah,
absolutely. Anyway, Mark, honestly, man, it's been a pleasure, and
yeah.
I'm
Thank
really
you a lot.
happy. I'm really happy that we're doing this.
So sure, honestly, it was great time. So let's do it for sure again.
Oh yeah, absolutely.
And
And go ahead, go ahead.
yeah, sure. By the way, for our followers and listeners, you can have Aiden's website Betweenplays in description, and also his the link for his Facebook group. And you also have the links for the Money Here website and the Money Here Facebook group. So just go ahead.
Basically, I was going to say the same thing. So uh, that's it to all the listeners that are out there. It's the exact same thing. If you go onto my website, naturally at the articles, you're going to see links for Money, and it the same thing in my YouTube. You're going to have the links and all that kind of stuff. I think that I've been reading, Mark. I've been reading all of the research and stuff that you do when you make your articles and stuff like that. And I think that you're on point. You do a great job. You do a lot of research, and naturally we're not financial advisors. We're not professionals in the field, but we are looking for great opportunities, and we're just sharing, and we're sharing what is truth because we're putting up
Yeah, we just
what
want to share what is true
information is.
for us. Yeah, what we think would be like the future. So
Exactly.
and
Yeah.
just I just wanted to add for my last point,
Yeah.
like I feel like from like compared to other big companies that give advices, we're not sponsored by anybody. So when we do something, we do it because we would invest in it, and we give the reason why, and we're not sponsored. So I think it's like so we give our heart when we do it because we don't like to first like our wagers, and we don't lie to ourselves too.
Yes. So just before we're going to hang this up, I just want to debate about discussion about it or a whole 9 yards. But I actually just saw here on Yahoo Finance, and I just want to share this with whoever's watching. Let me just do a
Yeah,
stop.
sure. Can you
Share
share
here.
on your screen if you can?
Yeah, I'm gonna share on my screen. I just got up, so just let me get out of here. So stop sharing this, and let me go here, and I'm gonna share the screen right now. Just gotta click on share screen, and just taking 2 seconds because of the fact that
Sure.
it's
There's no rush.
a lot of stuff that's open, right? So I have a lot. I should shut down other ones, but that one's going to be coming up very soon. Tell me if you see it.
I still don't see. Oh yeah, perfect. Here we go. It's just loading.
There
Yeah.
you go. Yeah. So it's
Okay,
loading here. I'll go back. It's going to stop playing. So Cathie Wood sells more than 100 million of Tesla stock, despite saying it will rise over 300%. You know, and I'm not going to ever doubt someone, but you know, if I know something is going to rise over 300% in the future, why would I sell it? You know what? Why is this? This is a big amount. This is a big sale. Um, it's huge. So you know, it's over 142,000 Tesla shares. So it's a big thing. Why? Why did this happen? Is there a potential of something going on? What we discussed about? You know, we don't know, but you know, S&P 500 skyrocketing the way it is. I don't know,
Mhm.
man. I like I said, I'm not holding any Tesla right now. Naturally, if there's a crash and it drops significantly, yes, I'll jump right in. But definitely me, it's for myself. Once my strategy for my cruises
Yeah.
are done, I'm out the cash. So there you go. There you go. So there you go. So that person on Twitter was telling the truth. There you go. We did our DD. All right, Mark. Have a
Well,
great day.
thank you for everything,
Yeah, you too.
and hope we'll be able to meet next week again to talk about the stock market companies. I
Oh
think,
yeah,
yeah, it would be
definitely.
great.
Yeah, even if we focus on a common stock or something like that.
And by the way, thank God we just wanted to talk 30 minutes because it's gonna be like an hour 20.
But I told you this would probably happen. I knew it, but it's great. You know what? It's look, people can have a coffee, they can eat supper, whatever.
You know, for our viewers, don't watch a movie, just watch our live stream. You're gonna be free for like the whole night.
That's hilarious. All right, Mark. We should hang up
All
at
right,
this
bye.
point.
Have
All
a
right,
good
I
day.
hang up. You can see my age. Hang up. It's not a telephone. All right.
Bye.
Have a great day,
Have a
Mark.
good day.
Bye.